So let's talk about why a person may or may not want to invest in cryptocurrency. Now, it's attractive to a lot of people because they can see some hype coming out about it, the whole next big thing. And there is certainly a degree of truth to that as far as I'm concerned. If you look at the adoption of technology and the fact that cryptocurrency is just a facet of Web 3.0, which is the ownership of the internet, it makes sense why cryptocurrency is happening. I think it's worth mentioning that there's some cautions. Things can get very choppy, quite volatile. So if a person doesn't like volatility, if a person doesn't understand the big picture, then maybe crypto is not a great bet. I think whatever you invest in, you have to believe in the value of that investment. You have to understand why that investment is valuable, why it can gain value, why it's of interest to other investors, or why other investors will sell it. We could look at crypto in terms of comparing it to other asset classes. If we look at foreign exchange, a person can get involved there and they can start trading the relative values of currencies versus each other and using some price action analysis and some understanding of global economic events, a person can make money. But foreign exchange is a very crowded space. Everybody is using money in all of the countries to exchange with other countries. So for a retail investor whose basic approach may start with, how can I make more money than the dead interest rate bank account I have? Or how can I do better than bonds? Then they might be looking to crypto because crypto's the new thing. There's always that hype value. But if a person had, for example, for me, if I was starting off from a base investment amount of $1 billion, I'm sure I'd have some exposure to crypto, but I think by and large, as a trader, I'd be looking at foreign exchange. The gains from foreign exchange at that level would be enough to justify the activity in that space, but you're not going to see the percentage moves in foreign exchange as a smaller investor, operating with thousands or tens of thousands of dollars. It's not a volatile space. It has movements that are quite easily predictable in some ways. I mean, arguably, no one can really predict what the market's going to do, but it's understandable, the factors that feed into it. They're not hype driven. The biggest thing that happened in foreign exchange was Russia invading Ukraine, in the last couple of years. You couldn't even buy Russian currency at that point, but foreign exchange is known for being quite steady in terms of price action. It's just not going to give anywhere near the return potential, I think, that somebody with a principled approach can get inside of crypto. Looking at bonds, there's nothing safer in the world, some would argue, than investing in bonds. But bonds make quite low interest. They're only slightly better than a bank account. But if a person had a lot of money, then the amount of interest that they received would be considerable. Like it'd be enough to do things with or to live off of, right? But if you don't have hundreds of thousands of dollars to put into bonds, 5% interest on a bond isn't going to make a huge difference to you. If we look at crypto versus stocks, then we're looking at some more volatility, some more potential to gain when we look at stocks. Stocks can have some dramatic moves. Stocks don't have anything near the volatility that crypto does because the stock market is so much larger. So it takes so much more money to make those proportional moves. Stock investment is a real option for anybody, and a person can invest in stocks and also be investing in cryptocurrency. The way you do this is you look at which companies are operating in the crypto space. If you look at exchanges that are publicly traded, let's take Coinbase, for example. They have a performance that's somewhat tied to the value of cryptocurrency. Another type of stock, maybe to consider in addition to exchanges, are the miners. There's several different prominent mining outfits. Riot comes to mind because I have some of it. If you see a miner holding its own in the space, especially post-halving, it's a good bet that they're going to be continuing on. Whenever we have a Bitcoin halving, it's anyone's guess which mining companies will stay, which might fold, the new technology, its availability, how far ahead did they plan, just things to consider. If you want exposure simply to just Bitcoin, you could invest in an ETF. And an electronically traded fund is basically just tethered to the value of whatever that fund represents. So in this case, a Bitcoin ETF. If you buy that, then whatever moves Bitcoin makes, you either suffer or benefit from in the same amount. This offers a level of safety that isn't offered by things like self-custody. So in the sense that you don't have to manage the technology. ETFs are a safe way for institutions as well to get involved.
One more thing to consider about ETFs is that the asset managers and investment companies don't typically hold the Bitcoin in their own reserves. What they do is they contract out custodianship to another company like, for example, Coinbase. Coinbase is by and large the go-to company for that right now. In time, there will be competitors in this space also looking to custody these assets, but right now, Coinbase is kind of the go-to. And as a result of that, they earn revenues on that service as well.
ETFs, by their nature, are going to be more attractive to people who are slightly risk averse in this space while still wanting some exposure. So, one thing to remember too is that crypto can be pretty stressful. Watching prices move and jump around a lot might not be for everybody. Also, with a technology that's in its infancy and a lot of argument sometimes in the space about whether it's here to stay or whether some people think it's just a Ponzi scam or magic internet money, as if real money isn't. You start to see why people might not perform well. So it's good to remember that you have other options without missing the boat on crypto entirely. If you are simply looking to do whatever you're doing, whatever your investment is, you have to be comfortable with it.